Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The enormous subscription that some of the new kids on the block have received in the specialty chemical space has only raised the decibel levels in an already buzzing space. It's prompting a lot of experienced fund managers to relook at the valuations of some of the listed biggies in the space and try and figure out whether the growth trajectory could actually improve and could the valuation multiples even further re-rate, as difficult as it sounds. But the question to our guest today is whether the slightly iffy periods of the last 2 or 3 quarters for their company are now behind, and are the predictions of a significantly higher growth rate over the next couple of years, at least if not longer, for Vinati Organics easy to achieve and believable? Vinati Saraf Mutreja joins in. Vinita, good having you. Thanks so much for joining in. When I look at almost all reports post your Q3, and when I speak to fund managers who are invested in your company, all of them say that the last of the tough quarters is now behind, and you will actually see exponential growth starting Q4 itself, but lasting for the next 2-3 years. Would you believe that to be the case?
I certainly hope that's the case. And it's not just wishful thinking. There are good signs pointing us for that. Firstly, ATBS, which was down for the previous 2 or 3 quarters, is up and is back to pre-COVID levels. In fact, we are sold out for ATBS till May. The demand was a bit slow in the previous quarters because there was no oil exploration. Oil and gas segment was down, but that segment has picked up, and how? So definitely things are positive on that end. Even our new expansion is complete. We have increased our capacity from 25,000 to 40,000 tons. So we are back on track, expecting about 15-20% growth in ATBS in the next 3 years. Now coming to our other projects, butyl phenols, our new factory has started. There was a delay because of the lockdown, because of COVID, that put us behind by about 6 months or 8 months, I would say. But now most of the products we are making, all 4 butyl phenols, the quality has been approved by all our customers. We are seeing good traction, demand pickup happening, and that would also add significantly to the top line in the next 2-3 years. We have also announced a merger scheme, which would mean, if gets approved, would mean that we would start making antioxidants, which is a further downstream integration or value addition of butyl phenols. And these AOs are used as plastic additives, and they have demand in both India as well as for export. We would be the only doubly integrated AO manufacturer and the largest in India. AOs itself have a revenue potential of 500 crores. Butyl phenols have a revenue potential of 300 crores. And given the ATBS expansion, I hope we are able to double our revenues in the next 3 to 4 years.
Oh, okay. Well, we hope so too. Just a couple of small questions for the near term and then the slightly longer term. So you mentioned about this ATBS uptick that you're seeing. Just wondering, this expanded capacity, does it get utilized in a staggered fashion, or when you say you're sold out, parts of the expanded capacity are also put to good use currently?
No, so sold out for the existing capacity, but we are already using the expanded capacity. The expanded capacity has been put in place keeping in mind the demand for the next 3 years. So because you can't keep on adding a line every year, the way it works. So by the time we achieve 40,000 in sales, that would definitely be 3 years. So say this year we do, for example, 24,000. Next year hopefully 30. The year after that 35, and then the third year 40,000.
Yeah, no, I understand. I was just wondering if you're already putting some of that expanded capacity to good use already.
Yeah, we absolutely are. We absolutely are using that line to meet the demand.
Okay, and just one quick follow-up question, Vinati. While oil and gas has from the Nadirs really come up meaningfully, would you believe that with the return of normalcy, so to say, to the world, despite the lockdowns, and I'll ask you a question on that, water treatment and some of the other projects which people believe also aid your ATBS business would ensure that it's not just till May, growth would be there in the segment even for the better part of the year?
See, absolutely. In fact, the water treatment, the personal care, those kind of businesses were not affected. ATBS was still, we were still doing 50, 60% of the capacity. And that is where ATBS was being used, is being used. It's used in personal care, in medical gels, super absorbents, detergents, water treatment. And that is here to stay. And that is growing, at a steady 5 to 10% annually. See,
Okay.
oil and gas is just about 30% of the total application of ATBS.
Yeah, sure. Okay. Fair call. The other question, and just since we're talking about the recovery, what do the return of these lockdowns in Europe? I mean, there is maybe might happen in India, but that notwithstanding, since you are so large in exports, what does these lockdowns in Europe mean for quarter 4 and the immediate business? Getting impacted at all?
Not really. I think these lockdowns are maybe more work from home or maybe school from home and restaurants being shut, but factories were never really shut. And we are a B2B business. So the lockdowns as such don't impact our business. But what we have seen in Q4 is an exceptional increase of some of the key raw material prices. Now, that has nothing to do with these lockdowns or COVID. I think this is a temporary situation, maybe created by some logistics issue in China, which seems to be settling down now with China opening up. I do see those prices softening as well.
Okay. In fact, some reports suggested that you would be a beneficiary in some of these as well. So net quarter 4, would you believe that there could be some impact on operational metrics negatively, or would you kind of even it out?
See, net quarter 4 demand is good, but RMC prices have increased. Now, because we have a contractual or formula based pricing system, but it's a quarterly system. So we get our price increase for our products next quarter, April onwards.
Yeah.
So, you would see some, I would say, margin reduction in Q4. But then again, compared to Q2 and Q3, it will only be better. And Q1, again, you will see our prices increasing.
I get your point. Okay. IBB on a low base had a fairly decent growth in quarter 3. Would you believe this traction could continue?
See, IBB has been good this year. Initially in Q1, the sales were high because people were stocking up, ibuprofen since it's used as a fever reducer, etc. And generally, the large manufacturer of ibuprofen that was shut for 2 years, they have started again. We are a main supplier for them. So sales have picked up. This year, we would be about 20% more than last year. And we expect a lot of new ibuprofen manufacturers have come up in India in the last 6 months because the product itself has been doing well. So I would expect a steady growth rate there of 5 to 10% year on year.
Okay. And last couple of questions, Vinati. Firstly, just taking a leaf back to the opening statement that you made about this amalgamation of vinyl additives with the presumption that it goes through. A couple of reports that I read said that this kind of gives you a monopolistic narrative. Would that be true? And therefore, would the pricing largely be always in your hands? And therefore, would it be seriously margin accretive? I ask this to you also because you would be amongst the best margin profile companies within the listed universe. So to take your margins higher would mean quite something.
No, see, antioxidants globally, there are a few other players like BASF, there is Ongwan Chemicals, there's SI Group. They have, in fact, larger capacities than we do. We would be the largest in India. Certainly wouldn't be a monopolistic situation. It's just that in India, these products were not being made because the raw material wasn't available. Now we have the raw material, so we will be making it in India, and it would give us some edge over imports. I wouldn't call it margin accretive. I have always maintained that on a long term, since we are a manufacturing business, please be cautious on your margin assumptions. Target it as somewhere between 30 to 35% on an operating level.
Okay. Lastly, Vinati, I heard you already. So you mentioned this already. So you kind of said that you hope that you would be able to, or not hope really, but might be confident that you would double your revenues in 3-4 years. Some of the more aggressive assumptions point towards about a 35 to 40% run rate on the revenue from a depressed FY21 base for FY22 and 23. fair, or would you approach it with a bit of caution? That kind of assumption.
See, I have always been someone, I would like to under promise and over deliver rather than over promise and under deliver. So I would still maintain, just take 20% revenue uptake, because it takes time. Today, if we are introducing AOs also in the market, butyl phenols also there are existing players. For us to get qualified approvals, get larger contracts in place, it takes time. Similarly, for ATBS to reach good capacity utilization of the new line. So maybe 25%, but I would say 35% would be a bit too optimistic.
Fair call. Vinati, really appreciate you taking the time out and joining us, and all the best for the times ahead.
Thank you. Bye.
And viewers, thanks for tuning in to this leg of the talking point. That's Vinati Organics, believing that growth rates would be fairly strong, but typical of their style, wanting to underpromise and over deliver. Thanks so much for tuning in to this show.